Yeah, let's get more detail and analysis on this and bring in Mandeep Singh of Bloomberg Intelligence. And Mandeep, what we're talking about here is specifically A800 and H800, China-specific chips being caught by increased curbs. How do you analyze that sort of tangible impact on the industry in 2023?
Yeah, look, we know China revenue is about 20% of Nvidia's overall revenue, and there is likely some pull forward of that revenue given this wasn't a complete surprise. You know, we're talking about these curbs and ban. I definitely think there was a pull forward element, which is why the company is probably saying there won't be any near-term impact. But down the line, you have to ask yourself, about the customer base of NVIDIA's chips. And it's mostly the hyperscalers. Hyperscalers are about 50% of all the buyers of these GPUs right now. And there are 2 or 3 big hyperscalers in China. So if they're not able to get their chips for AI training, which is the primary use case here, I think that will have an impact. But near-term impact probably is muted because of that pull-forward aspect.
Interesting, muted. We're down by some 10% over the last 30 days. And indeed, more broadly, we saw more than $70 billion shed from the overall, chip stocks when you're looking at the semiconductor indices. How are you anticipating China-US to tug back on some of the valuation run-up that we've had? Because it's such a mixed picture for chip makers out there more broadly. We're just talking about ASML and woeful numbers coming from them.
Yeah, in the case of Nvidia, you had a streak of upward revisions. And to the extent the bogey for 2025 is $80 billion in data center revenue. Now, when you look at, the incremental data center spend right now, every dollar is going towards AI chips and networking. And clearly, that will not change. So some of that, chips that NVIDIA can't sell to China will be taken by somebody else. And I have no doubt that the company is undershipping demand right now. But that 80 billion number, it's a very high bogey because the overall data center spend right now is close to $50 to $60 billion when you add all the capex amounts. So clearly, for NVIDIA to reach that target in 2025, they need demand from everywhere, including China. And I think that's what is at stake here in terms of what kind of impact it will have 2 years down the line.
Mandeep, this is a story, if there is one. ASML is the company which makes the machines that make the chips. And its bookings plunged 42% in the quarter gone because there isn't demand broadly out there. But demand from China doubled. In other words, proportion of orders for chip-making equipment from China doubled. And yet, in that same 24-hour period, this company learned about expanded export curbs on chip-making equipment. How complex is that? Explain it to us.
Look at the supply chains right now. So the fabs are all based in Taiwan. The assembly is being done in China. So clearly, it's not a surprise that your latest end equipment is being needed in China because they want to, keep doubling down on their ability to assemble and manufacture a lot of these chips. But at the same time, I feel the big driver for a company like ASML, or for that matter, the semi-cap equipment complex, is the diversification aspect geographically. And every government right now is trying to make sure that they have local semi-fab manufacturing. And they want to get those equipments in the region where these companies are operating. So long term, I do think the drivers are there for equipment companies, especially EUVs in the case of ASML. But near-term dynamics, obviously, you can't take China out of the equation given all the manufacturing is being done over there.